weekend all. Ira Epstein with your Metal Market Wrap-Up, and this is your weekly edition for Friday, the 2nd of December, 2022. It's so funny saying December. You know, in Chicago, the weather's gorgeous. We were near 50 degrees today. I was downtown, loving the city. Little bothered, though. I went into Macy's just looking for things for my wife as I was downtown. I had to go see my friend who fixed a watch band that was broken, and in the better women section there were no people. You saw the store levels somewhat crowded, the sneaker places, the shoe sections, they were swamped, the purses, but that was it. And I was surprised. I expected bigger crowds there. The streets were pretty jammed, so that was good. So we'll see just how the merchants are doing. It is only December 2nd, so let's understand that. And it was a Friday. Tomorrow will be a whole different game. It's a Saturday, and people go out and they'll do a lot of their shopping. The stores are exceptionally well stocked from everything that I saw at them. Okay, so now what do? Let's talk about today because it was a surprise. The market had a bearish surprise in that instead of losing jobs off the original number of 261,000 for October, we got 263,000 new jobs. But it's a decline because they took the October number and revised it higher to 284,000 jobs. So in plain English, what this means, the jobs market is continuing to stay stronger than the Fed expected. And these interest rate hikes going from 0 to 3.5%, 4% have not so far had the desired impact unless you look back and you say, you know, after the pandemic and we put in all the easy money to get everything going, we were hitting 500, 600,000 jobs at a time, and now we're less than half of that. That's one way to look at it. But I'm not buying into that theme. The theme I'm buying into is what the Fed says. And the Fed is saying that they want to see weakness. This isn't weakness. Plain, simple English. This isn't weakness. They may get what they want out of the CPI report. I think that's December 13th. They're going to get a series of PMI reports now coming out in the manufacturing and other sectors, service PMIs and so on. We'll see those numbers. They may show some weakness. But the key number, and it is key, is labor. Because if you get a lot of people and they can keep working, that doesn't break the back of inflation. They have the money to spend even at the inflated price. You don't need a master's or a doctorate degree to understand that. I hope you get that. If people have money, they spend it. Unfortunately, people are also racking up, those that don't make great money, tremendous debt. I hate this pay as you go. Reminds me as a kid, I did that when I was a young kid, and I'm talking young, maybe in my teens. You can go in the stores back then. I know you'll say there weren't even cars at that point. But there, you would go in and you could pay as you go and put things on layaway, and then you'd come get them. And now they're saying, nah, go in. But to do that with your grocery bill and so on, I don't know if this is right. I've got my doubts about that. There are a lot of bad things. Overall, my opinion is this rally that is going on is, again, these pivot people looking for reason upon reason, and getting this rally in the stock market's nice, but what does it mean? As for the metal markets, and that's what we're talking about, I've been telling you I think silver is so much stronger than gold. I've been telling you that I really like the copper market, that I think that it could be a $5 market in the making. I have not changed my opinion. And I do read that people are saying, Ira, you're wrong. If you're reading the first early warning signs in China about copper, they're stocked up. I don't think the whole world's going to keep counting on just China. I think that when we get past this malaise that we have to go through with these high rates to beat down inflation, we're going to realize we can't get inflation under 4% or so. I really believe that's the case. I am not with, was it Jeremy Siegel today on CNBC going crazy, talking that inflation will crack 2% and so on? I don't know where he's at. One last thing. I went in today to Whole Foods to buy navel orange. Not a bag. I wanted an orange. How much could an orange cost? On sale, $1.61 in orange. You don't think there's inflation? Okay. So we go to the gold market. On a monthly chart, all you've done is come up to a key number on the monthly. I don't like to trade off the monthly, but I like to look at it because long term, it gives you yearly ideas. The bear phase of the market is over, is what it's telling me. The market has come back to fight a battle at what we'll call an equilibrium number near the 1800 level. The next thing I look at is the weekly. Does that look bearish? No. This is pointing that the market's up, and it's been able to stay up since it broke this. You can almost envision a trend line down that it broke, and the market's hanging over there. I like it. It also tells me that I'm pullback support probably in the 1714 level. We get rid of all that and we start building a weekly chart, and we see we have a pattern with the swing lines, and this is all included in my charting course, by the way, of higher lows, higher highs. Super duper important. Where's the resistance? You're there. So the smart money, quote unquote, whatever smart it means, at this level, the 1799.5, they're probably taking some money off the table. Let's face it, you've just come from the 1624 level and you've come up nicely. That's a big rally. So I'm expecting to see some resistance between here, and lo and behold, there's my friend the Bollinger Band saying, Ira, I'm going to back you up at 1819.5. The odds are you're not going to stay over that number, and you have a market that's not embedded. So I think you're at a zone where some profit taking can step in. I'm not bearish. The gold-silver ratio just continues to say be long silver, not gold. And that's how this chart looks. And look, you're up into that whole resistance zone. So here too, I think that you've gotten to the point where the pros are taking some money off the table, and you wait for pullbacks in the market. The support now will be what the resistance was. Do you see the gray line? That's the 200-week average. The market finally popped over it. That's the number the market's got to look at now. You don't want to see the market back under 2060, and until that happens, I consider this getting a little too rich in price. In the copper market, ultimately, I think you're coming back here. Right there. Against these highs. It's not a number you haven't hit. Trend is up, but you're caught in the sideways action. I want that market to churn, not run from here. Why? The longer it churns here, it's base building. And then if the fundamentals go as I think they will, which means that we will see over the next 6 months, we're beating the inflation down to levels that the market's going to accept, but it's not going to be the 2% level the government hopes. That's what I think is going to happen. And I think it's because labor is going to stay stickier than people think. I think employers are scared to lose people because they can't replace them. I think that after the first of the year, there's another group of my age that are going to retire, and it's not me. But that's what will happen. They'll just say, you know, I'm done. We're the baby boomer set, and you've got to replace it with younger people. And it's obviously it's hard to hire them at low prices, and I don't know if there's enough of them. It's a bunch of things. War babies were a big group after World War II. I'm part of that group. We are dying off now, and we don't have anything other than Vietnam that caused something, but it wasn't like World War II. I lived through that one. So I'm looking for the resistance to be up there on this, but I am friendly this market. In the platinum, I wouldn't be buying the first rallies into the 100-day average in that number. Let somebody else own it. You also don't have an embedded reading. In the dollar index, I'm bearish, have been, and I've been very adamant on the daily charts telling you that gold is gotten bullish because the dollar's breaking, and I'm no longer, and I said this up here, I'm out of the camp that thinks the dollar just keeps going up. I'm done. No, I ended that back here. I'm in the bear camp, but I'm also in the camp that now says, okay, you're down to a point where you've extended this break, you're getting into an area where I don't think you're going to attract new short sales, and I think profit taking setting in against the lower Bollinger Band. So you put it all together. I'm sorry I did that. You put it all together, And this is just not the place that I want to be right now. So I wait. My turn will come. And that's what trading is about. Patience. Wait for your turn to come on all this. We have our Cyber Week special. I'm going to repeat. It ends. It's coming up in just a couple of days. It's over. You won't get another break like that this year. It's going to be a long time. I'm raising the price of all the courses. But what a cool Christmas gift. Either to yourself, to a friend. You can give the course away. You can give the subscription away. Whatever you want to end up doing. I don't know what happened there. But you get it all working for you that way. And the way that I increased the price of the course, that there was a madness to this. I said, I think that I should be charging for my small courses the equivalent of what the charting software that you get with them would be, what a couple of weeks of my full research would be, and the course itself, and make them equal themselves for the morning subscriber video that would be either the ETF or the futures. And that's what I've done. So that's how I came up with this. I just didn't pick a number in the sky. So basically, you buy one, you get the other for free. How do you get it? Well, if you have questions, you can call my staff, but just move your cursor up here. It'll get it done for you. And again, I thank you for watching, giving you my explanations, and I'll see you Monday.